Hi, I'm Dana Samuelson, President of American Gold Exchange in Austin, Texas, and this is a video gold market update for February 16th, 2016, with gold at about $1,200 an ounce as we speak. Gold went up $100 an ounce last week. This is a big move. It's a technical breakout and potentially a trend reversing move. Why? Well, in a word, China. China has been in an economic slowdown. We saw the first wave of that hit last July, and it shook markets worldwide. It's gotten worse, and it's rippled through to the rest of the world's markets at the beginning of this year. So far, the Chinese Shanghai Composite's down 23% this year, and this has led to a contagion effect with their trading partners around the world. The US Dow is down 8%. The global Dow is down 9%. The IMF has cut its global forecast for economic growth worldwide in 2016 as a result. Japan, the ECB, Denmark, and Switzerland have negative interest rates in their countries. Sweden dropped a bomb last week when they lowered their interest rates into the negative further to 0.5 point. This is undercutting the U.S. economy and the Fed's ability to raise interest rates again. Many economists in December were expecting the Fed to raise interest rates 4 times in 2016. Now it looks like they may not raise rates even once. In fact, in testimony before Congress last week, Janet Yellen refused to take negative interest rates off the table as a potential monetary tool going forward. And this has driven a flight into gold. It's one of the few assets that's truly safe haven. In addition, oil still remains problematic, falling as low as $26 a barrel. And while a low oil price is a benefit to consumers who use it in their cars, it's bad for world economies that depend on oil, like Venezuela or Brazil or Russia. This truly has a recipe for currency defaults that we've never seen before. This is a bad thing. So that's why people are going to gold. Let's take a look at the 2-year gold chart. The big picture is this. There are 2 downward blue trend lines on the chart. As you can see, with the price action on the right end of the chart, gold has punched as high as $1,247, which breaks the downward trend decisively at the top of the chart. This signals a potential trend reversal. We're at 1,200 today, so we've seen a correction, but still it's in trend breakout or trend reversal mode. The lower line signals a technical breakout at worst, over 1140. Now you can see these are downward trend lines that have been in place for the last 2 years, and we're starting to see reversals of that. If we go back to last July of 2015, you can see how gold fell off hard when China had its first bout of economic weakness, down to 1084. It rallied up to 1160, stalled, and fell back to 1104 when the Fed met in September, and everyone thought that this was the best chance for the Fed to raise rates in 2015, and they didn't raise rates. They not only didn't raise them, they voted 9-0 not to raise them, which is what led to gold spike from 1104 in the middle of September to the 1183 peak in mid to late October. That's when the Fed had another meeting, and they decisively said that December would be a time when they would really consider raising interest rates. And gold fell off the charts all the way down to a new low at $1,050 an ounce, which was concurrent to the Fed raising rates for the first time in 9 years, 1/4 point. Well, that's what primarily made gold an underperformer last year, was everyone wondering when and if the Fed would raise rates and when more would come behind it. But now we have a world economy that's been shaken to the point where gold is the go-to investment. We've seen gold grind higher through January from about 1,070 to as high as about 1130, where its 200-day moving average has been. And then when it broke over that 200-day moving average, that was a positive signal. Shortly thereafter, we had the week of February 7th, where all the economic news was negative and gold just skyrocketed. It moved up $100 within that week's time frame, which is a very, very strong move. And we think that this is a very bullish move for gold. It certainly signals that it's one of the only safe haven assets available in the world today, considering world stock markets, world economies, other commodities are down. Gold's not. It's one of the only commodities that's really performing right now. It's truly acting as the safe haven asset that it's always been. We think there's a real base under this market with support at 1180 and support again down about where the 200-day moving average is now, 1140. Going up, we see resistance in the short term at 1225 and again at 1250. We'll probably consolidate the gains that we've made around 1200 and hold around there right now with $20 range plus or minus. But this looks like we may have finally a real trend reversal in gold, especially if the world economies continue to perform in this quarter and going forward as they have. That's it for now. Thank you for your time.